Okay, so how we doing, guys? Today, just started this new stream. I know I've been away for a week, but I've just come back from holiday. I had a lovely holiday. I went on a cruise, visited three different cities in the space of a week. Had an amazing holiday. Didn't look at the charts. Actually, let me not even lie and say I didn't look at the charts once, but I didn't look at the charts much over the weekend. So over the week away. So now that I'm back, I'm happy to be back into the markets. I've got quite a lot of stuff to talk about actually. Um, and one of the first things I do want to talk about is actually the experience that I've had with Funded Next. And before we actually get into that, let's see. Before we actually get into my experience with Funded Next, in fact, I don't know if I want to actually talk about it. Let's just say with Funded Next, I've passed their evaluation with 300k worth of capital multiple times. This is 100k. Well, it's not this one. This one 200k, 100k, past phase one and phase two. And they breached the account, so they didn't allow me to have the account. Their reasoning was that my margin risk was a lot for the second one, second time I passed it, and the first time I passed it, their reasoning was that I copy traded. So yep, Funded Next just pretty much took the piss, and they've only awarded me with 100k worth of capital, but I'm still currently trying to dispute that. So let's not talk too much about it. The fact that I've been away from the markets for a little bit of time means that we're going to start this stream just trying to catch up on what's actually taken place over the past week. So let's watch this video. Shout out to the traveling trader. He's one of the people that's allowed me he's one of the people that summarizes the markets in a way I really enjoy. So let's take a look and watch this video and see what he's got to say.
What is going on, traders? So much has changed over the course of the last week. You definitely want to pay attention. This will be the only video you need to get you prepared for the upcoming week in the stock market. Now, we had that October 10th daunting candle here, and we were trading inside of that for almost 2 weeks. We finally broke out of that last Friday. And just as I was recording this, it looks like Trump and China have preliminarily agreed to a deal with regards to rare earths. Now, this couldn't come at a better time, as a lot of the momentum stocks, the data center stocks, the crypto-related stocks, the rare earth stocks have all been retracing for the last couple of weeks, which means that this will likely set up a ton of opportunities through the year end, and we want to take advantage of those opportunities, so stick around. In this video, we'll go over the critical news for this week, the China rare earths deal, the potential removal of those 100% tariffs. CPI came in line, of course. There is no way that the new acting BLS chief having a hot CPI right before a Fed meeting next week. Speaking of the Fed will likely cut rates next week, as well as reduce quantitative tightening. This means going back to easy money or easier money than it has been for the last couple of years. We also have some Mag 7 earnings. We have Meta, Microsoft, and Alphabet reporting Wednesday after market close, and we have Amazon and Apple reporting Thursday. That only leaves Nvidia, but they...
Alright, so we do have earnings this week. Just really quickly, I want to take a look and see what Forex Factory's got us prepared for this week. So we do have FOMC on Wednesday. So because we have the Fed funds rate expected cut on Wednesday, most likely we're not going to have any trades today. We'll keep an eye on this because obviously we've got this massive gap up. So if we do come down and close the gap, it's gonna be most likely price gonna end up trying to target levels of liquidity down here. So we'll keep an eye on this and see what happens with the gap today. That being said, we do have important news on Wednesday, so if we don't get positioned today, tomorrow is going to likely be a no trade day in anticipation of the federal funds rate decision on Wednesday. So that's what we're going to be looking at over this week. We're going to keep an eye out for what happens on 29th of October, and hopefully after the Fed fund rate, we have some more opportunity to understand where the market's gonna go. Um, so yeah, we will end up doing in this stream before the market opens. We will do our pre-market analysis. So definitely stick around. Let's get back into this guy's video.
A report weeks later. And like I said, we finally traded above the October 10th candle, so we broke out of that ugly range. Now, it is the stock market. We are obviously in a bubble, and we are in an environment where news headlines do drive a lot of the price action. However, that, along with the VIX crashing below 17, which was the level from October 10th, does signal that we are entering the Q4 scenario where we have a lot of tailwinds behind us. We have earnings, guidance, a Fed cut, the announcement of a reduction in quantitative tightening, the potential deal with China, and of course, the government is still shut down, so we don't have any data to counter that. So in my view, as we said in the last couple of videos, if we trade above that October 10th range and we break out of that with the VIX crashing, the bubble will likely continue into 2026, in my opinion. So if you are risk on, I'm going to tell you where you want to be positioned. As I said, a lot of the power stocks, the data center stocks, a lot of the crypto plays, a lot of the rare earth stocks, a lot of the AI software stocks that are not Mag 7, these all entered a significant pullback or correction within the last couple of weeks. We will also be going over the playbook and game plan for the week, and I'll tell you what I'm buying and what I'm trading. Side note, I didn't know a lot of people were that big of fans of silver when I said that I expected silver to crash, and silver did end up dropping by 13%, by the way. I got so many comments saying either how wrong I was, which is fine, we can disagree, but how idiotic it was.
What?
Some people almost seemed offended that silver was likely going to crash. I don't know. We're not in this for feelings, guys. We're in this for objectivity and to try to squeeze money out of the markets while maintaining a risk managed plan. Let's get right into it. So first we'll jump into the news and then I'll talk about the technicals and the plays later. So the latest news is that China and the US reached trade consensus. China's Minister of Commerce, Li Gang, announced that China and the United States reached a consensus on key trade issues after candid and constructive talks in Kuala Lumpur. Now, Scott Bessent offered a little bit more detail, and he said they had threatened to put a global export licensing regime, and I believe that they are going to delay that for a year while they re-examine it. He's talking about rare earths, so there might be a 1-year delay on those rare.
See, my issue with news, and this is why you need to, when you're trading, when you're getting into these markets, you need to understand that a lot of the news is just, it's just noise. Like, none of it actually reflects what's going on in the market. And although it seems like it's good news that's showing up, it doesn't actually reflect what the market and market participants are actually doing. For example, right, the news came out a few days ago, or maybe over the weekend, that China and the US reached a trade deal. We gapped up, but this gap up seems to be about to close. And if this gap does close, if we get a close below here, this gap is most likely going to be the beginning of a downtrend, because we've still got quite a lot of unserved liquidity resting at these areas down here. So this news is not actually valuable information. All it is noise. It just tells market participants that it just tells institutional investors that, you know, we can get positioned at higher places in order to short the market down, and that's what I'm going to be looking to do over this week if we get the right information. Don't get me wrong, news events like FOMC are definitely catalysts to change the trend, but things like tariffs and, you know, the US and China trade war, it's all noise. It doesn't actually directly affect what the market's going to do, and that's one thing you guys need to understand. If you want to be traders that actually make money in these markets, you need to completely ignore what the news is saying. Let's get back into this.
Earth's export controls. Now, just logically thinking about this, if we're going to delay that for a year, then this might mean that the Trump administration is going to push for investments so that we can start refining rare earths here and not be so dependent on China. There might be major opportunities in some of those rare earth stocks that dropped and will likely, I don't know if they will drop on this news, but if we do see a little bit more of a sustained drop, I think that will be a welcomed opportunity. Because in my view, the way I'm thinking about it is that the administration will likely aggressively push for rare earths refinement in the United States. So stocks like Quad U, which is Energy Fuels, MP, METC, USAR, there might be opportunities in those stocks. Obviously, as the week progresses, we'll have more news on the China-US deal. And if it warrants a video, I'll definitely bring that to you guys. Now, CPI came in line. Now, this is not a surprise, and I was again surprised by how many people disagreed with what I had to say about CPI likely coming in line because the new BLS chief cannot afford for CPI to come in hot. So we had weeks of no data, and the BLS said, no, we are going to release CPI. If you guys recall, the Trump administration fired the last BLS chief because Trump didn't agree with the way that she and the BLS were putting together the employment numbers. If you remember, there was that huge revision of employment data where the employment data came in showing that at least 900,000 jobs were not, as a matter of fact, created. So on Twitter, I said if CPI comes in super hot tomorrow morning, there is no way the Fed is going to stop QT, and there's no way that they cut rates next week. So my bet is that because they were so eager to release it during a government shutdown nonetheless, that likely the CPI was going to come in line plus or minus 0.1%. CPI magically came in at 3% versus the forecasted 3.1%. Therefore, we're going to get rate cuts next week. And of course, I will be live on this channel covering FOMC and trading it live with you guys. And I just want to pause real quick and tell you that I'm doing a free 2-day live accelerator. We're going to be going over options on the first day. I'm going to be teaching you everything that I know about swing trading and day trading options. And the second day, we'll be going over futures. And I'm going to be telling you how I day trade futures. So if you want to gain a next level understanding and take your trading to the next level, especially because we're close to year end and you want to start 2026 with a bang, make sure that you sign up for the 2-day trading accelerator live event below. If you do not register, you won't be able to attend. Yes, it is free. Make sure you sign up, get your name on the list, and I will see you there. And as I said, the Fed is expected to cut rates next week. Now, they might announce the reduction of quantitative tightening, which means quantitative tightening is when you let assets roll off the balance sheet, and the Fed might stop rolling assets off of the balance sheet. And who knows, they might even get into buying assets once again. I don't think that that will be the case for this Fed meeting. They're going to do it in steps, in my opinion. At first, they will stop completely the rolling of assets off the balance sheet. And then likely by next year, they will start buying treasuries once again in order to improve the liquidity in the treasury market, bringing down rates, pumping money into the economy. And like I said, Mag 7 reports next week. Meta, Microsoft, Alphabet on Wednesday, Amazon, Apple on Thursday. Now, some of these companies don't report guidance, but what I'm going to be looking for, I think every one of these companies is going to beat on revenue and earnings. What I'm going to be looking for is a few things: Amazon AWS numbers, and more importantly, whether Meta, Microsoft, Alphabet, and Amazon are going to be scaling back on their AI capex, how much they're going to be spending on AI, or whether they're going to be increasing or maintaining AI capex. Because once these companies start dialing it back, which I don't think will happen for this earnings cycle, I don't think we'll see companies dialing back capex, in my opinion, until at least next year. But the minute that companies start dialing back on AI capex, then I think we're going to start getting into bubble popping territory. Now, the reason that I don't think that these companies are going to be cutting back on capex is because we're still in an arm race stage. There's a news report. Record $38 billion of debt sale nears for Oracle-tied data centers. So Oracle is close to, or they might have already finalized it by the time this comes out. Oracle is close to closing in on a $38 billion debt deal to build data centers. Now, data center plays are part of the game plan that I have for the next few months, and we already made a killing on IREN last week. I'll disclose my play, and I'll tell you some other plays in that market niche. But I don't think that a lot of people understand why these companies are building data centers and trying to improve compute at a massive scale, orders of magnitude. It's true that all AI has given us so far are chatbots, right? Which they are amazing. ChatGPT is great, Google Gemini is great, but are chatbots going to make up in revenue for the amount of spending that these companies are doing? No, of course not. There are many more application layers that are going to come. There are many more real world AI applications that are going to come. Think about the healthcare sector, obviously autonomous driving. We don't even have to name all the sectors. Every aspect of your life is going to be impacted by AI. But in order to start building the application layer and to start seriously thinking about building the real world applications, you need the hardware as the base. You need the compute power. That's why all these companies are spending so much money on data centers, and they need the GPUs as well as the power for those data centers so that they can start thinking about how to scale the application layer and make AI penetrate, or let AI penetrate into every aspect of our daily life, and thereby building new businesses and new revenue models on top of that hardware layer. And that is part of the reason why, as I've been saying to you guys in videos, that I think the bubble will continue for at least another year or two. And that's the exact reason why you're seeing some of these momentum names like IREN or CLSK or Cypher Mining. A lot of these companies that are now data centers were Bitcoin miners. But Bitcoin mining is not a very profitable business, especially as Bitcoin's hash rate increases. And so these companies are like, wait a minute, we have cheap electricity. Some of these companies have the land. They have GPUs. They're like, wait, if we get some talented engineers, we can retrofit these mining centers into AI data centers where the profit margins are high. And we can start renting out this space to customers who want to take advantage of our compute and our electricity. All right, let's get into the technicals of the S&P 500 and the NASDAQ as we traded above the October 10th candle. I'll tell you what my market outlook is, and then we'll get into the playbook and game plan for the week. Hopefully this has been helpful so far. So as I said in the last couple of videos, right, while we're trading inside this candle, we are not out of the woods. And in my opinion, at that point, you definitely wanted to tread carefully and not open so many longs so many leveraged longs while we were in here. Based on seasonality, obviously, I would have liked a bigger pullback. And I've said that time and time again. I said that in August, September, and now October, that I would like a bigger pullback. I think it's healthier. Not that I'm already 100% invested. So it's not like I want the crash to happen because I didn't buy anything. But one, maybe I would like to commit more cash. And two, I think it's healthier for the market if we do actually pull back by more than just 3%. And three, I know quite a few people who are watching this are waiting for a significant pullback because you are not fully invested. But I said at least according to my risk strategy, I was not going to be opening a ton of leveraged longs while we were still trading in this October 10th candle. And in my opinion, that was the right decision. Now, obviously, I'm still going to day trade as I shorted silver a couple of times and will likely take another silver short at some point multi-day. But now that we are out of the woods here, because we broke out of that October 10th candle, as well as what I talked about before, which is the VIX crashing below.
See, it's naive for him to believe that we're out of the woods. Personally, I think for us to be out of the woods, we firstly need to see price close above here. Alright, let's just skip this guy's video, because I'll be honest, I don't really see much value he's providing to us unless he's going to talk about what happens usually. So let's actually watch this bit, because this might be interesting. There could be some value in this.
Account on Twitter, Subu Trade. Shout out to Subu Trade. But we are now at this 6 month, exactly the 6 month range from when this data was dropped. So we talked about the Zweig breadth thrust indicator. Not going to get into what that is, but it is a breadth indicator. that is rare, and it triggered on April 24th. Now, exactly 6 months later, as I said in that video that I did in April, that we will likely be green 6 months later, and we are green 6 months later. Look at the stats for the next 6 months, also 100% green, and I expect that to be the case. So with that said, for at least the next 6 months, I do expect the S&P 500 to at least hit that $7,000 mark. And with that, I think will come quite a bit of opportunity. So let's talk about the playbook for the week. Now, I mentioned IREN here. IREN is a crypto miner turned data center. This sector right here, I think, is going to catch a bid for the next few months because, as I said, there just isn't enough compute. There aren't enough data centers to support what the AI applications want to build. And whether these companies in 10 years will still be around, or whether we come to find out that, oh my God, in 2025 and 2026, we built out 35% on IREN, going from 70 all the way down to 49, just tagged under the 21 EMA. Now, the reason that I bought this is because we box in each of these sectors, and we've bouncing off my live swing trading play team at Atlassian. Now, if you work with AI software, look at BMNR and we range. And I know I'm going to get questioned, which means that, well, that is what is coming up next week. Shout out to Shawnee, who's up 16% for the month and 100.
Alright, so now we're just gonna get into promo. So let's skip this. Let's go into our pre-market analysis. And as you can see up here, it is nearly 2 p.m. So we're gonna get into our pre-market analysis and show you how I get into trades every single day when the market's open. Obviously, last week I was off on a wonderful holiday, and if I can, I'll show you a little bit about that very quickly. Very soon, I should say. I had a wonderful time in I had a wonderful time in Portugal. I went to Portugal. From Portugal, I went to Tenerife. Had a wonderful time in Siam Park. From Siam Park, I actually went to I stayed in Tenerife for a couple of days, and then from there we went to a few other places which we will get into shortly. But yes, I had a wonderful time, and I will show you that really quickly. So if you take a look, I was in Lanzarote. Had a wonderful time in Lanzarote. Beautiful city. Lanzarote is probably the most elegant city that we visited. I wonder who this is giving me a call. This is also Lanzarote's beautiful city. I'll try and show you some more. This is Lanzarote still. That's a picture of me. I'm in the art gallery. This is another picture of me. So we had a wonderful time where we were. Let's see. I'm sure there's more pictures, but I can't seem to find them. Maybe it hasn't yet been. Let's have a look. Oh yeah, it's wonderful. I even went to the Ronaldo Center. But yeah, I had a wonderful holiday. But let's get into the markets. I'm sure that's what you guys are looking forward to hearing about. I do wonder who it was that's giving me a call. But alright, so if we take a look at the markets at this current moment in time, we can see that price is most definitely in a bullish uptrend. And prices just continue to make higher highs and higher lows, which is beautiful to see. So first things first, we can confirm that this is a bullish uptrend. This level here would have been our external liquidity. We've taken our external liquidity, so we can also mark out external liquidity as the highs, and the highs have been taken. Yes. The only issue with the highs being taken without a close above, without a close below, is that although the highs have been taken and we haven't closed below back into the range, which most likely signifies continued bullish momentum. And what we would have wanted to see is we would have wanted to see the market try and close this gap today in an attempt to try and get price to close back down below it. So we'll have to monitor and watch what happens today. But yeah, we haven't quite closed below. So in this situation, it's potential reversal conditions. Trades targeting intraday liquidity are good risk to reward. So what that means is we had price close above our level of liquidity. We had London session. We had a sweep of Asian session lows during London session, and then we had a sweep of London session lows during our pre-market. So as you can see, this is our Asian session lows. This was swept here, and this is our London session lows, if I'm not mistaken, right here, which was swept in pre-market. So what this should now do is this should provide us with an opportunity to potentially sell the market down if we can get the market to close bearish. So what we're going to do, we're going to monitor this during our session and see whether or not we'll get an opportunity to sell the market down in session. So we're currently not going to be looking for longs at this current moment in time, because we've got our potential, and that's this level, that's this right here, potential reversal conditions, which is actually trades targeting intraday liquidity, which are good risk to reward. Okay, so we swept our London session lows during our New York session pre-market, which is now at the moment, which is when we swept our London session lows. So moving forward, we need to identify our liquidity map. So where's an important fair value gap, and our important level is going to have to be this area right here, this gap, this volume imbalance which took place on the daily chart just today. We saw price gap higher, so we're going to want to see price come back down and close this gap at some point. So we're currently in an uptrend, so we can get rid of all of this and confirm that the market is trending. And now we want to identify our important levels of fair value. And as I mentioned already, we've got this daily volume imbalance. We've also got this level right here, which could be seen as an order block. However, I'm not going to mark it at the moment. So what we want to see today is we want to see price actually continue the rally higher. When we saw a sweep of Asian session lows, and we saw a sweep of London session lows, we presented an opportunity to try and buy inside our gap. However, because we look for trades during New York session open, that is not a valid trade to take. So at the moment we've got daily volume imbalance / gap. That's an important important level. We also need to take a look and see if you've got any levels of internal liquidity, which at this current moment in time we do not, because we've already swept our London session low, and we've already taken our gap high as well during our London session, or pre-market in London. We took our gap high, so there's a chance we could come back and take this liquidity up here before coming down. So that's also another level to look out for. And that is actually our London session high, which is right here. So we've got this level here, we've got this level here. Alright, now, so the market's bullish. So just to be clear, the market is bullish on the daily chart, meaning we're expected to continue bullish momentum higher, and we've got liquidity resting up here, which is our London session high, which is right here. And by our London session high, we have also got our pre-market London session high, London pre-market high. So this is all a cluster of liquidity right here. And so if we did want to get long into this market, what we'd want to see is you'd want to see price come back down into our level of liquidity, which is our fair value gap, or our, what I've put down as our daily volume imbalance slash gap. You'd want to see price come back into this gap for us to be able to buy the market into our level of liquidity up here. If we take a look at the 4-hour chart, the 4-hour chart is still in an uptrend. As you can see, we've come back and we've partially filled the gap, but we haven't completely filled it. This is what I mentioned a moment ago. We want to see price come back down into this gap here before going higher. On the hourly chart, we're currently printing lower highs and lower lows, and this can be seen from here. We swept liquidity up here, came back down, made a lower low, bounced inside our gap. So what we should expect to see here is for price to come back down and hopefully make some sort of pattern in order to target our London session high, and that is how we're going to get higher today. So that's what I'm looking to see. I'm looking to see our 4-hour and month and 1-hour candles are in confluence. For and 1 hour order flow are conflicted. However, 4-hour is bullish and 1 hour is bearish. A bullish impulse on the hourly chart can shift momentum into bullish order flow and find price print higher. Okay, so this is what we're looking to see. We're looking to see the 4-hour and 1 hour somehow reach a neutral, or not neutral, but come into confluence with the overall uptrend. And the way we look to see that is for price to come down into our order block, into our fair value gap, which is down here, and then print some sort of W pattern that will take us back into a bullish uptrend. And that's exactly what we've seen so far. We've seen price come down, form this sort of W pattern right here, and now we're attempting to make another higher high and higher close. So this will put the hourly chart into a bullish uptrend. This will put the hourly chart into a bullish uptrend, and we should see price rally aggressively into this level of liquidity and just see price continue higher aggressively. The question is, will we find an opportunity to look for this position? And that's the main question in all of this. Will we be able to position into this market today? And we've only got about 15 minutes until the market opens. So we have to be very, very patient on our entries. We do not want to get into this trade aggressively. There is a chance we just come up here, sweep liquidity, and then fall aggressively in an attempt to target our gap and close our gap. So I'll say the main thing is you just want to be patient in approaching this market. You don't want to get in aggressively. You don't want to trade aggressively. You want to make sure the market is in tandem. It's trading in tandem. And what I mean by trading in tandem is, I mean that the market needs to be trading in confluence. All the time frames need to be confluence. So that's the hourly chart, the 4-hour chart, and daily chart. All need to be trading in tandem. All need to be trading in confluence. And until then, you should not look for an entry. So as we approach this open, what I'll be looking for at 3 p.m. when the 1-hour chart closes is to see if we can get a close above this level. And if we can get a close above this level, I'll potentially be looking to get long, as we've already swept our Asian session lows, and we swept our London session lows during pre-market. That being said, if we get a sweep of liquidity to the upside, and then we fail to close higher on the hourly chart, it could be an indication that price is actually going to come back down and close our gap. So if that happens, I just want to sit on my hands and wait to see how the market closes, because if we get a close inside this external level of liquidity, as we've stated here, this is a potential reversal condition. We've already taken our external liquidity highs, so this would be a potential reversal condition, and we'd be able to take trades targeting intraday liquidity maybe tomorrow, or maybe, given the fact we've got FOMC on Wednesday, maybe we'd have to take that position on Thursday. So this is how I enter the markets. This is how I manage my emotions going into the markets. I plan my trades ahead of time, and this is the best way to approach it, because if you don't come into the market systematically, you don't know what to expect. So what I'm expecting to see today, I want to see the hourly chart close green on the hour at 3 o'clock. I want to see a big push, or if we don't get a massive green candle into 3 o'clock, then potentially we could see price come down and come into our order block, into our fair value gap, and close the gap. And if we get a close of the gap on a green candle, I'll be able to get long in an attempt to target our liquidity unswept at the highs. So yeah, that's what I'm looking at. I'll be back with you guys in a moment. Alright, so we've got 15 minutes till market opens, and we're looking to see, based on our playbook, we're looking to see whether or not price continues our bullish momentum. We've already had a sweep of our London session lows and our Asian session lows. So if both of these levels do hold, we should just see price rally aggressively into our levels of liquidity above there. It's going to be an interesting day, mainly because I haven't got a guaranteed entry position, so there's a chance I've already missed the positioning for the day. That being said, if we do get a close of the gap, then we could potentially see price come down aggressively. What I do want to say is we do not ever take trades into our gap. Once price gets into our gap, we exit the position if we've got into a better position above. However, we do not look for trades into the gap but through the gap. The gap is our target, the gap is always our exit position, and so anyone looking to sell the market from here is going to be solely mistaken. And yeah, so that's what I'm looking at the moment. Any short positions into this gap is a bad position. If you do want to get short, you'd have to wait for the gap to be closed, for price to close below the gap, and then you have to wait to see an opportunity for price to go low. But getting short from here is very risky business, because this gap should act as an area of demand, and when price gets into the gap, individuals should be looking to add positions. So I'm going to be keeping my eye on this gap very clearly, just to make sure we've got good opportunities on where we're positioned. If price does come back down, then I'll look to buy inside the gap. If price doesn't come back down, then I won't be taking a trade today. Like I said already, funded next. They really did not want to fund me. As soon as I got funded on this account, past phase 1 and phase 2. I'll show you this. Phase 1 on this one, phase 2 on this one, phase 2 on this one. So I traded these simultaneously, and they said that I can't keep this account, unfortunately. And I passed phase 1 before that, I passed phase 1 before that as well. And when I was funded, they deactivated the account and they took away £7,000 altogether. So it was $7,000 on this one, and if I'm not mistaken, £3,000 on this one, all legible on the 6th, and they just deactivated the account. Scummy. And there's absolutely nothing I can do. Funding next really did take the mick, but these things happen. And what's so silly about this as well is that I was expecting 7k on these two accounts, and these lot just took it away from me, and there's nothing I can do about it. The hard work that goes into doing evaluations, and then I decided to do another evaluation, which I passed this one, and then I passed the second one as well, which was, if I'm not mistaken, this one. Passed phase 1, passed phase 2, and they only gave me one account. They said I traded with too much margin. They sent me a stupid email, which I'm chasing up in regards to. I'm trying to chase it up. but what can I do, man? All I know is if whatever accounts they do give me, I'm taking as much money as I can from them, and they will never see. I will not lose an account to them. I'll never ever blow an account, and they will never ever see another penny out of me. Because I'm passing these evaluations, and they're not giving me the accounts. So they must be scamming. Is that a scam, or is that not a scam? If I'm passing the evaluations and you're not giving me the account, you're scamming me, and you're not refunding me the money that I'm paying for the evaluations. You're scamming me. But yeah, there's not really much anyone can do. So just really, the point is, you just want to stack your money up and get your own personal account, or just diversify and have multiple different prop firms. That's what you really should be doing, diversifying and have multiple different prop firms. Because you never know when FTMO will decide to just stop paying, or when Funding Next will just decide to stop paying. Terrible. Anyway, we've got about 7-8 minutes till market open. Once again, I said I'm trying to get positioned inside this area here. And if price does come down to this area, I'll be watching for green candle. I won't be getting long aggressively, only because the hourly chart is already bearish. So I won't be getting long aggressively, but I will be waiting to see whether or not we get a bounce from this gap. If we do get a bounce from this gap and we get a green candle close, then I'll try and get long immediately into the market in an attempt to watch the market rally higher, close green on this hourly candle, and target our 1 hour levels of liquidity in higher time frames. So that's what I'm watching out for. And if we don't get that to play out, then most likely I'll just sit on my hands for the day. Because it's not every single day you have to take a trade in the markets. Some days you just don't, and I have these rules in place in the system. You've got to hold your trades to target as always. Minimum 2 are on intraday liquidity trades. Take 2 trades per session to prevent over trading. Be careful not to change your bias when entering New York Open, and that's extremely important. I'm bullish at the moment, so when the market opens, I do not want to begin to look for short trades. That's not how pre-market analysis works. If you're short going into the market open, you stay short. If you're long going into the market open, you stay long, and not vice versa. You do not change. So that's what I'm looking for today. Pre-market plan must always remain the plan in session. And there we go. We're ready to watch the market open. We're very much bullish this session. We just want to get positioned as close to this fair value gap as possible. That being said, if price does come down into this gap, it might be doing so in an attempt to sweep out all this area of the gap that has not yet been closed. So what we would want to see is we'd want to see whether or not price comes all the way down in an attempt to sweep out this level. And if we do come all the way down to sweep out this level, we would then want to be very, very patient in looking for long trades, because getting long into the market also requires confluence on the hourly chart trend and the 4-hour trend. And although we're bullish on the 4-hour, if we do decline, this would not be great for the 4-hour either, and that could indicate that we actually are in a potential reversal condition as to where we begin looking for shorts tomorrow. And if not tomorrow because of the news, then maybe Thursday after the news. So yeah, that's what I'm looking for. and that's how I'm looking to play the market today. Okay, so we're about 30 seconds away from market open, looking to get long inside this gap. But first and foremost, we'd want to see price come down aggressively into the gap and potentially bounce. If we get an aggressive bounce, I could potentially look for long trades into the market with an attempt to try and see the hourly candle flip bullish and close up here, above this level here, and that's the main reason for looking to get long in this area. It would be an attempt to target this level and have a market structure shift on the hourly chart to push the market bullish on the hourly, remain bullish on the 4 hour, and continue bullish on the daily. So that's what we're looking to play. Let's see what happens at market open. So I just realised time went backwards last month. Time went forwards in the UK. So it turns out the market opened an hour ago, um, which means that this would have been the opportunity to get long right here at the open, and then we would have seen price continue to rally higher. Um, and then London session high remains at this level here. London session high remains at this level here. So I'm gonna watch to see if price is defended here. And if we are defended here, then I will get long. But from the looks of it, it seems like the market is actually trying to fall. Um, on the hourly chart, it looks like we're trying to fall. On the 4 hour chart, it looks like we're seeing further bearish momentum. So we could actually have a no trade day today. Obviously, I'm a bit off the mark simply because I was on holiday last week, so I'm a bit slow. The market opened at 1:30, so if the market opened at 1:30, which was an hour ago, that means I would have wanted to get positioned long here. So that means I could still get long. However, the fact that this candle right here had a gap and then we ended up closing below the gap, this is an indication to me that maybe we are actually trying to go lower. I'm not permitted to take trade short into a larger gap. I'm only permitted to get long. So I would want to argue that if price does get back above this area and closes, then I can actually get long. However, it would be a low probability trade. Days like this is when you just want to sit out the day, sit out the market, just wait. We have a reason to wait. We have news on Wednesday, which is actually really important news. So there's a chance this just becomes a no trade day. I'm gonna keep my eye on this. Gold is down another 3% today, which is incredible. Take a look at that. Wow. So if I was going to get positioned in session today, I would not have had a trade entry, because as you can see, we've been printing lower highs and lower lows. Low, lower low. So we wouldn't have had a trade opportunity. And because we haven't got volume at this current moment in time, this just looks like mess to me. So it doesn't look like I'm going to be trading this. Unless we can get a close above this minor volume imbalance. It's not great price action, is it? The 4 hours definitely bullish. The hourly is not quite, and if we can't get above this imbalance, then it's pointless, isn't it? We'll keep an eye on that. And as you can see, we're continuing to fail to get above this um, volume imbalance. This is going to be the most important level, because once this level gets taken to the upside, we should be able to target levels of liquidity at higher levels, and we should continue this rally. However, if price is unable to at least get above this volume imbalance, then we are very, very unlikely to also close higher on the hourly chart above here. And this is the main level that we're looking at on the hourly chart, because this level will determine whether or not we're going to go into a continued uptrend on the hourly chart and have everything fall into confluence. Once we get into the hourly chart uptrend, the 4 hour should remain in an uptrend as well. From here on the weekly chart, it would actually be a lovely place to position. Based on power of 3, we'd be getting positioned inside the wick if this candle was to remain green for the week. So this is actually a great place to get positioned if we do get a close above here. We've got about 7 minutes to decide that on the 15-minute chart. So that's what we're going to look out for. If I do get positioned into this trade, it is most definitely going to be half our usual position size, in an attempt not to, get too aggressive prior to the FOMC meeting on Wednesday. And so we're going to watch to see if we can get an opportunity to get long, and if we can't, we just sit the day out and probably not trade tomorrow either, as we're waiting for FOMC on Wednesday. Let's keep on watching. Yeah, so it's not looking great at the moment. Just a couple more minutes before this candle closes, unless we get some sort of what I call miracle candle to get this market to rally up and close above this level. It's pretty much unlikely that we see further bullish momentum today. It's unfortunate, but it is the most likely outcome, considering we've got red folder news on Wednesday. So today I do apologise. I was a bit confused in the timing. I didn't realise that New York session actually opened at 1:30 today, so I was an hour late. I did miss the open. That being said, it's not a bad thing that I missed the open. We've been quite weak today, and were likely to remain relatively weak. Obviously, we had a massive gap, which is where most of the momentum came from on the open on Sunday. So now we're gonna wait to see if this gap gets filled today. If we get filled today, then if we get filled today and we see a close below this level, this is 141. If we get a close below this level today, then we could see further downward momentum, and then we could look for short trades, and that would be this. Looking for short trades targeting intraday liquidity, and we'd look for that on tomorrow, which is actually unlikely to be tomorrow, probably on Thursday after the news has already taken place. We don't want to put money at risk for pointless positions. We want to be confident in our position, and most professional traders would be waiting to position after the news comes out of the rate cut. We're expecting a quarter point cut, and that's priced into the markets. We're also expecting a press conference for more guidance. Bearing in mind we have been in a government shutdown in the US over this month and last month, so this is what we're going to be watching out for. This is what a lot of traders are watching out for. As I said already, we're unlikely to continue to see the market rally higher today. However, if we do get some sort of decline here at the open of the next candle, we could potentially see price bounce off our gap and go higher, but it's not my most favoured outcome, unfortunately. So we're just gonna keep on watching the tape and pretty much just anticipate what we expect to happen. As long as we're planning our trades, we should be protected. As long as we're in a bullish bias, monitoring our external highs, notice that external highs have been taken. In a potential reversal situation, we can do this, but we know the market's trending up. We've marked out our most valuable areas, which is our daily volume imbalance, which is the level that we're watching here, as well as important levels of liquidity, which is up here. This is an important level of liquidity. This level here is an important level of liquidity as well, simply because this is the area that closes the gap. So that's also an important level of liquidity. And we also will be monitoring previous days highs and lows, which I actually haven't marked out, but previous days lows is down here, so that's not really going to be much of a thing to keep an eye on for today. And session lows and highs have already been taken. The only session high that hasn't been taken is London session high. So if we do come back into this gap, we may be able to see a position, see a rally into our London session high, if we're lucky. If not, it seems like we're not going to take a trade for the day. But yeah, that's what we're looking out for, and that's why we plan our trades prior, so we don't get caught in the manipulation of the market. And as you can see, the market is just being manipulated. Price went up. So since London session, we've seen price break down, then we've seen price rally all the way up and sweep out all the people who positioned long. So all of these lot got swept out. All the people who positioned short here, they've all had their stops taken out. And then the people who got long here, all their stops got taken out down here. And all the people who positioned short here, all their stops got taken out up here. So this is what we call market manipulation. This is the worst price action to trade. You never want to trade these price action. And as long as we have a system like this, which protects us from trading terrible price action, we should be okay. And that's why it's important you guys join in with me every single day, Monday to Friday, Eastern Standard Time, and you learn exactly how I avoid the chop, and how I learn when to position and how to position and why. So yeah, let's continue to watch the tape. Let's see what happens over the next 15 minutes. Do we get price coming down into this order, into this fair value gap? And if we do, are we likely going to see a bounce? Um, if price closes below this level, which is our intraday London session low, if price actually closes below here, it's going to be unlikely we see a bounce up. So now we're just going to monitor this hourly chart, see whether or not we can close above here, and if we can close above this area to confirm a bullish uptrend, and if so, we can take market higher by getting into a long trade. Let's continue to watch the tape. Alright, so we're starting to see price come back down into our fair value gap. This is a great price action, so it's not likely we're going to find a trade today. That being said, we're going to keep our eye on this, because if we do manage to see price come down into our fair value gap, if we get some sort of bounce inside the gap, that could be confirmation that the gap's been closed and buyers are coming back into the market to target our London session highs. Um, it's a bit messy today, so we want to be very, very, very patient. That being said, obviously, if this does close bearish here, this is going to be more likely downward momentum. It's not great. It's not great at all. That's fine. We don't have to trade every single day. Let's keep on watching. Alright, so we're not really looking. Looks like we're not really gonna get into any trades today. Um, Still waiting to see if we get a little bit of a miracle candle here, and I highly doubt it. Um, hourly chart's about to continue its bearish close, and that is most likely going to see price um, what I want to call a sweep to the downside um, into our order block or our fair value gap, I should say, into our gap. Take the liquidity rest in here, probably target the liquidity rest in here, and then by the end of the session we should see price push back up and close green. Um, if we do get that today, that'll be perfect. If we don't get that today, we can look for that tomorrow. Um, if we don't get that tomorrow, we can look for that on Thursday, as Wednesday is going to be news. So we're not going to trade on Wednesday. Alright, let's continue to watch what happens for the day. Let's continue to watch price action. And as I said, we should be targeting this liquidity here and inside this gap once again. It's gonna be tough to try and get position today. But we're still gonna watch the tape, which is all we can do really. All right, so we're continuing to watch this area to see whether or not price comes down into this gap. Um, it's been slow movements today, as expected. Obviously, we've got New York open. We've got the market about to. We've got the market anticipating federal funds meeting, FOMC meeting on Wednesday. So we're most likely going to see slow price movements over the next couple of days. That being said, we're expecting some bullish momentum to come in this area, potentially around this area here. Expecting some bullish momentum to come in, and that's around the midpoint of the gap. So if we get a bounce in this area, it will be perfect. If we close the entire gap, that will also be really good. But at this current moment in time, we're not really expecting much from the markets today. We've already had the vast majority of the move take place with the opening gap. So now, bounce off this order block that's built here, or could use this as an order block. Regardless, anything that takes place inside the gap will be valuable. And if price does get back into the gap, we will be looking to position long in there. That being said, we're watching out to see whether or not this candle closes red. It's a 4-hour candle. The hourly candle is already bearish, so we want to see a little bit of a bounce inside this this opening gap. That's mainly because we want to see price rally back up and fail to close bearish. And what I mean by fail to close bearish, I mean this would be a continuation of the decline, of the downtrend, I should say. Downtrend. If we close below this level, so we don't want to see that. What we actually want to see, we want to see price come back down, downtrend, and then on this downtrend, we see a bounce that closes above this level here, confirms the uptrend, and then we can start seeing price target liquidity up here and see price continue higher on the daily chart, the weekly chart, the daily chart, and the 4-hour chart as well. Let's see the monthly chart, and obviously the monthly chart would be bullish as well. So that's what we're looking to see. Obviously everyone's quite bearish at the moment, even though the markets continue to make all-time highs. Really doesn't make sense to me. That being said, that's what I'm looking to see. I remain bullish as the market continues to trend higher, and you should too. But you should be cautious about where you position, making sure you don't leave yourself vulnerable to being swept as I'm looking to position in the stop losses of buyers who struggle to position effectively. So that's what I'm looking out for. Alright, so we're still seeing price go lower and lower. Um, my trading window, my execution window is 2 hours after the open. So if the market opened at 1:30 today, that means my execution window is going to be closing in the next. I'll give it 45 minutes. So by 4 p.m. UK time, that's my execution window done. So what I do want to see um, as price is approaching my execution window is I want to see us take the liquidity rest in here, and I want to see us get back into this fair value gap. And if we can at least do that, maybe I might be able to get long. That being said, this could just be a sweep of liquidity as well. So if we do get a green candle here, or we come back down to here, and then get a green candle around here before my execution window closes, I may be able to get long. So just keep an eye on price, keep an eye on the chart, and see how it goes. You want to make sure, you know, everything is trading according to your plan. And obviously our plan today is to try and get positioned inside our daily volume imbalance or gap, in an attempt to target our unswept internal liquidity here and our London session high, which is right here. So that's what we're looking at. That's what we're looking for. I think if the market closes green on the 15, then I will get long on this position. So I'm gonna watch for the next 10 minutes and see how that goes. I'll be back in about 5 minutes. Stay tuned. Alright, so we've got about 4 minutes left until this candle closes. Let's see if we can get positioned long into the market. It's just going to confirm. So a long position would be in anticipation for price to rally back higher over the next 30 minutes. And that would be to confirm a green candle close here, target liquidity up here, and potentially put the low in for the week and see price rally higher. We don't ever take trades until we've got a candle confirmation, so we've got to wait for the 3 minutes remaining to close before we can get long. However, I will be opening up my MT4 app to get positioned long, and as you can see, it's going to be this newly funded 100k account. They've funded next, even though they've taken away pretty much 600k worth of funded capital. That's this 200k, 100k there. And if you take a look at as well, when I got funded on this account here, and then this one as well, I got funded on this. After they said I breached copy trading rules, I did this one, and then they said I breached margin rules. Perfect with funded next, right? You can pass their evaluations and they make up a rule and just ban you. But as long as these lot still allow me to buy accounts and get funded, with this funded account, I'm going to make sure that I reinvest the profits back into another evaluation, and I'm going to get max allocation, and I will never lose that account. It's a vendetta that I've got against funded next to take as much money as I can from them as possible on the next funded accounts that I receive, because what they've done is really a piss take, if I'm being honest. Nevertheless, if you can see, I'm going to show you. If you can see, just open up my MetaTrader 100k brand new account. If you can see that, if it's clear, if not, it should be clear enough. And I'm looking to get positioned within the next couple of minutes, and that's going to look something like this. Buy trade here, we'll have a 100-point stop loss, should be something like this, and it's going to be risking 1-to-1 at the bare minimum, but I should be holding until the end of the week if we're lucky. If not, we see price reject off this level and come back down. But this is the idle trade that I'm looking to position into, and as we approach the final minute, I will be looking to get long. Let's see, US30. And let's see how this goes. Should be pretty good. I like to get positioned within the last 30 seconds of the candle printing the color that we want, which is green. And I'm going to risk 1% on this trade as well. Even though I should risk 0.5%, I'm going to go 1%. Okay. And I've just got long. I'm going to put my 1%. 100-point stop loss is also in play. Okay, so this was the position. 100-point stop losses right here. And now we wait. Hopefully this presents a low of the week. However, there's a chance that we don't. There's a chance that this remains bearish. And if that's the case, then we just take the loss on the trade. But it's still a nice place to be positioned, because if this is the low of the week, that means we just go higher from here. So this is a decent place to be positioned, and it seems like we're getting some bullish movement. So we're just going to watch that, see how this trade plays out. Yeah, we'll see how this one goes. Alright, so I just want to say it's important that we get above this level because if we don't get above this level, then we are most likely just going to continue to decline. So we are watching this level right here. If we don't get above this level, which we're seeing a rejection already, if we don't get above this level, then we're most likely going to continue going down. The reason we need to get above this level is because we need to get this candle on the hourly chart to print a green candle. If that prints green, then 4 hour is most likely going to continue printing green as well. And then the hourly will rally higher as well. It's the same thing with the what is this? This is the weekly chart and the monthly chart. So we do want to see price somewhat rally aggressively, but a rejection off here isn't great. We've got 12 minutes to the candle closes, so we still got time. However, we want to see this get above this level. So we definitely want to see that. Alright, so the reason why this is such an amazing place to position, as I said, is that because if we do get above this level, we've just got targets higher to target, and then after that, once we turn bullish, once we turn green for the day, I should say, all-time highs is always a bullish signal. When the market makes a new all-time high, the market's more likely to go higher. You want to buy high and sell higher, and that's a misconception talked to, said by people who aren't actually in the markets. People think that the best thing to do is to buy low and sell high, but the truth is it's not easy to buy low and sell high. How often does the market come down here? The market tends to just go up and 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 up. So if we do get price actually bullish today, if we do get price able to get above this area, we should see continued bullish momentum, and we should see a massive green week. So this is an amazing place to position long into the market, and it will be wonderful to have my week start like this off the back of a wonderful holiday, traveling through um, few different destinations. I did manage to go see the CR7 museum in Madeira, his hometown. Any OG Ronaldo fans, I'll know exactly what I'm talking about. But I went to Tenerife, I went to Madeira, I went to the Gran Canary, went to a few places in Europe last week. So it will be lovely to get a winning trade on my first day back. But nevertheless, let's continue to watch this trade play out. Right, so let's see what happens on this candle. We need to see some real green momentum, some real bullish momentum come in and kick in and really just push this market up. We did have it is a slight close above here, so all this selling should just be bought straight back up. However, there's no predicting this market. We could just be beginning to waterfall fall off a cliff, but hopefully we just get this brought all the way back up. It's not looking good though. So now we're just gonna wait and watch. It's not good to see a rejection so close to the end of the hourly candle, um, but we're gonna continue to watch what happens and see whether or not we get brought back up. And it seems like we're doing that. So this is the moment of truth. As I said, my execution window is between New York Open, which today was at 1:30, and 2 hours after that, 2.5 hours after that. So my final execution would have been in the next 15 minutes, and as this candle's about to print, we should get some direction on where the market's going to go. I'd like to see market target the highs now, but if we continue to see selling momentum come in, we could just see the market break down from here and try and fill the gap below, which isn't great, to be fair. But I'm gonna keep on watching this for now. We're seeing some sellers come in, so yeah, let's watch this, see what happens. If you're managing your risk, you should be all right. Nevertheless, let's keep our eye on it. Yeah, so given the momentum that we're seeing on the downside, it's not looking feasible that we're gonna go higher. It looks like we're about to reject off this level, and um, once the candle closes, it should be confirmed. So what I'm gonna look to do over the next 5 to 10 minutes is potentially reduce risk. Um, yeah, potentially reduce risk. I'm gonna keep my eye on it, but this current moment in time, it doesn't look great. If we can get above this this wick here, we could turn green for. We could get above our entry. It might be wise to try and reduce some risk on this trade. Um, if we get some bullish momentum that turns this candle massively green, then we could just let the trade hold. But other than those two scenarios, um, it's unlikely that this trade is gonna turn out to be a winner. And I assume that's because of the manipulation taking place, based on the news we've got later on this week. So it would be wise to reduce some risk at this moment in time, given that we're not seeing the volume that was necessary to try and send this market higher. So I'm gonna look to see if I can reduce some risk at entry, which we're slowly approaching, and unless this candle ends up turning green, I doubt I'm gonna hold the position. So I'm gonna keep my eye on this. The last 5 minutes of every candle is usually the period where there's the most volume coming in. So we're gonna watch this candle over the next couple of minutes and see if we get some bullish momentum kicking at the last 5 minutes of this candle. But remember, the purpose of this candle is really to try and get price to close green on the hourly chart and to go higher. So if we don't, we're out of a trade idea, and that's the main reason for trying to reduce risk. Um, Given that we're in a downtrend on the hourly chart, so we gotta keep our eye on this over the next 5 minutes. All right, so last 5 minutes we should see some bullishness come in. However, if we don't, I will be exiting. We want to see this candle close green on the hourly chart, so we should see bullishness come in right about now. And if we don't, then this this market has no hope of going higher today. So now's the moment we should see the bullishness come in. If you hop on the 15, we're starting to see the market go up again. What we don't want to see is a rejection from this area. So we want to see the bullishness really take hold over the next couple of minutes, and that should get us to close green on this hourly chart, close above here on this hourly chart, and hopefully see some bullish momentum really begin to kick in on the 4 hour, and hopefully also on the hour, on the daily. So that's what we're watching out for. What we seem to be rejecting, which isn't always great. We'll continue to keep our eye on it. Alright, so last couple minutes, we need to see some big green candles come through on the 15 minute to get us above this level, and if we don't, we have to exit. Um, Obviously, we don't have to exit, but ideally, we want to see this already. We want to see this already green and bullish on the 15 minute. That's the most ideal scenario. Um, and if we don't get green on the 15 minute, boy, I can't tell you what's going to happen, but just make sure you have your stops in place. But I want to see this rally prior to the close, and this is where we should see the most momentum come in. Markets are already expecting rate cuts on Wednesday, so I believe that should be somewhat of a catalyst to push markets higher from here in position before the market, because we already know what to expect really. So you should really just want to position prior to that. But we didn't manage to get a green candle close. If we can get above here on this candle, then we should be bullish, but I would have preferred for it to already be bullish. So this isn't always great. Obviously the hourly chart did not manage to close green, but if we do get a big move now, that should be the constellation, which is also good. But right now there is still some risk of price not going straight up from here, because we didn't manage to close green, but we'll keep our eye on it. And this is the area we're rejecting at again. So if we do reject off here, I would probably recommend we exit positions or reduce some risk at the bare minimum. However, let's keep our eye on it, see what happens. And if the 4 hour turns green and remains bullish, then we should be perfectly positioned for this week. We first need to break above this level. This is currently our hindrance level. So if we can get above here, we should be alright. But we continue to reject, which is not great. This is why we trade around the news, guys. We want to wait for the news to take place before we get positioned, because when we don't get positioned, the market fails to provide us opportunities where the market actually runs. And so I'm going to reduce some risk. I don't know if I should or not. So the hourly is bearish. Here, it probably makes sense to close this position out. I'm going to keep my eye on it. I'm not going to close it out. I've got my stop loss in place. So this is where it becomes a little bit of mind games. But the reason I'm justified in closing this position out early, if I was to, is because obviously on Wednesday we've got our news. So ideally I shouldn't have even been trading today. However, obviously it's at my discretion whether or not I trade. So what I'm going to do, I think I'm going to close this position out at break even. Or maybe I'll just move stops to break even. No, we don't do that. We don't move stops to break even. I'm going to close this out. If we get back to break even, I'll close this out at discretion. But it's the same level that we've seen a rejection of multiple times. It's the same level that we can't get above. It's the exact same level that's preventing the hourly chart from turning bullish in regards to order flow. So we're going to keep our eyes peeled to see whether or not we do end up getting some bullish momentum to come in. And as I said, this would be a great place to position given if we did not have news, because as I said, you want to buy at all-time highs and you want to make sure your position as close to fair value gaps and other gaps as possible, and that's what we've got at the moment. The only question is whether or not prices are going to come back down and sweep and shift the 4 hour chart into a bearish trend, and if that happens, we'd want to be out of the trade, and that's why our stop loss is exactly where it is. If we get below here, we want to be out, and so that's why the stop loss is in place. However, if I didn't want to take a loss on this trade, if I wasn't happy with the risk on this trade, I can easily just close this out at break even manually, and that's what I've built into my system. A manual close rather than a break even stop loss. You don't want to use a break even stop loss. You want to decide prior whether or not you're going to stay in the trade or not. So for me now at the moment, if price goes back to break even, I'll exit, but it's discretionary. in opposed to actually having a hard stop loss, because we can see price go to our stop loss and then continue and then just literally just bounce up. So we're playing with our risk. We're not actually playing with our stop. We're not actually playing with a stop loss. And there's a slight difference in that. And so I'm going to keep my eyes peeled on this market. Alright, so we got 5 minutes until this candle closes, and last 5 minutes the most aggressive part of the candle. I will be aggressively exiting if we go to break even. Wow, I can't believe it, but it's really expected to be fair, so I'm not going to be shocked or anything. Back to break even. I'm keeping my eye on it. Looks like we're about to exit. Still watching it. Seems like we're getting a little bit of a bounce from my entry. So if this bounce can turn into some sort of bullish move, then we can stay in the trade. And this is why I don't use a break-even stop loss. I exit discretionarily, based on, we still have our stop loss in place, so it's not like the trade's bad or anything like that. But you want to be discretionary with your exits, because market tends to be volatile when it's about to make a massive decision. Last 5 minutes, the most important part of the candle. So we're going to watch this and see if we can get a green close and some bullish momentum. I'm just going to quickly open the hourly chart and see what the hourly's saying. So the hourly's got an hour, about 45 minutes till the candle closes. So what we'd want to see from here, we'd want to see on the 15 minute, we'd want to already see some bullish momentum coming in, and at the moment we're not seeing that. But we're going to wait. We're going to wait until, the last couple of minutes. If this candle closes red, that's our signal to get out. But we're going to wait for the time being, see if this level holds as an order block, and if it does, then we can hold the trade long. And what we need is for this to be a green candle close. You really want to set out days that are anticipating news days, and that's a day like this. You'd really just want to sit this out, because it's not trading with any intention. It's trading quite slowly. Majority of my trades tend to just fly to the targets, but trades on days where we're expecting news tends to be a lot slower, and that's why I'm ready and willing to get out of this position. And we've just turned bearish, so we've just gone into loss, so I'm ready to get out. Let me give it a couple more seconds. See if we get another bounce. And we are getting another slight bounce. Is it going to be enough? Into the last minute of the candle. Doesn't look great. However, we'll keep on watching it right until the close of the candle. If we can get a green candle, that will support more bullish momentum, but without that, I'm going to be exiting on the close of the candle. Let's see what the first couple of seconds of this candle shows us. Do we get any aggressive bullish momentum? And if it sells off, then I will be exiting. Let's keep an eye on it briefly. doesn't seem like we have the bullish momentum that we're looking for. Let's see if it starts to come in. It is starting to come in slightly. Only slightly, but it doesn't seem like it's enough. So what I'm going to do at this point, because I don't want to see it come back down, this would be a wise place to put your stop loss in place back at break even, because you don't want to see it come back down to break even. So I'm going to move my stop loss to break even. So now I'm ready and willing to exit the trade, because I don't want to see it to come back down at all. So my stop's at break even. So if it even touches my entry, I'm out. So now we just want to see this go up from where we are. I'm still currently in the position. Still in the position. Are there enough buyers? Let's see. Still in the position. Still in the position. But it doesn't seem like there's enough buyers, and just like that, I'm out of the trade. And that's what you wanna. That's exactly how you wanna trade this market, especially when the market's trading the way it is. You wanna get out as soon as the market indicates to you that you don't want to be in the trade anymore. And I'll show you that right here. You don't want to be in the trade. So as you guys can see, I got out of the position as soon as price went back down on that candle. I break even, stop. So what we should see now is we should see some heavy selling into the close of the day. That's what I'm expecting to see. And the reason I'm expecting to see that is because we've already failed to go up multiple times. So now all we can do is confirm the downtrend. And when I say confirm the downtrend, I mean confirm on the hourly chart, which is already done. Confirm on the 4-hour chart, which would mean a close below here. And then on the daily chart, we begin our decline. So that would look like a candle close underneath this gap to indicate that we swept previous week's highs or external liquidity here, and then close right in this area right here, and close red right here, more around here, so that this external liquidity gets justified. And then the day after, or the next few days, we should see more red candle prints to confirm to confirm a market structure shift below here. So that's gonna look like this. You've seen price rally higher, and then we've seen this come all the way back down here, and then this leg should see us begin to target liquidity on the downside. So that's what I'm currently looking at. Obviously, I got taken out at break even, so yeah, I can't really complain. There's been absolutely no movement today. And it's pretty annoying because I was on holiday the whole of last week. And last week was easy money, man. Easy money. Last week was. But yeah, I guess that happens. But I guess from where we are now, I'm expecting further downward momentum, and I would love to get short from where we are, but it's just not a part of my system, so I'm just not going to take the trade. If I was to get short here, you could still see price come up here and sweep highs up here, so that's why I wouldn't get short from where we currently are. However, I'm going to call it quits. It's been a quiet day. Nothing much has really taken place. So yeah, I'm going to call it quits for now. I'll catch you back tomorrow, 8:30 Eastern Standard Time.